Hey folks, welcome to a product review at Finominal. Today we're going to look at BlackRock's Global Allocation Fund, which trades under the ticker MALOX. Now, this is a fund that at its peak managed more than $100 billion, but currently is only managing a fraction of that, close to $20 billion. The fund is unconstrained from a mandate perspective, and it claims to have one of the best multi-asset teams out there. So let's investigate in terms of what made this fund so successful and also what perhaps explains the decrease in AUM in recent years. The objective of this fund is to provide returns like equity, global equities to be precise, but at low volatility. Now we're going to kick off with a benchmark exercise, and we can see that suggested benchmark is the US Global 60/40. So that effectively means global equities with US investment grade bonds. Now, if you look at the performance of the Global Allocation Fund since 2008, we can see, well, almost identical trends to this benchmark index, right? But also that it kind of underperformed this very simple portfolio of global equities and US investment grade bonds. Now, this is with regards to just simple benchmark exercise. Let's investigate a little bit more in terms of what's been driving the risk and return of this fund. Now here we have a returns-based factor exposure analysis, and we can see the factor betas to the major asset classes. We do see there's a consistently positive beta to the S&P 500, where the beta was on average around about 0.5, 0.6. We also do see that there is a bit more range-bound exposure to US bonds, right? And also the US dollar index, a negative exposure. That simply means that from time to time, this fund has been holding foreign exposures, which might be international equities or international bonds. Now, there's no real significant equity factor exposure, so we're going to ignore that. But what is worth highlighting that from a risk perspective, almost all the risk is driven simply by the US stock market in this case, right? So the allocation to bonds and international bonds and equities and so on, right? Or even like small equity exposures, that didn't matter that much. Now, that's in terms of factor exposures and risk, right? So again, primarily equity risk, what we're dealing with, right? With a little bit of bonds. And then we can also look in terms of how much alpha this fund has generated. And alpha for us simply means the unexplained return, right? The return that we cannot explain via standard asset classes. Now, the interesting part here is that the alpha used to be large and consistent basically since 2004, 2021, but then turned negative. And that probably also explains why the fund is managing less than $100 billion today. And the other point worth mentioning is, right, that we can actually explain this fund quite well, given an R-squared of 0.95. So this is with regards to how the fund has done, right? So at some point, this fund has generated value for investors, but not most recently. We can also look at the risk of this fund. And here we have a drawdown analysis versus this, global 60/40 benchmark portfolio. And we can see the drawdown since 2009. Having said that, with perhaps the exception during the financial crisis where the Global Allocation Fund seems to have done slightly better, right? In almost all periods thereafter, right, it's done worse, right, than the Global 60/40 portfolio. So that's not that great in the sense of that, like from a, risk perspective, right, this fund doesn't seem to be that value creating. And as a kind of like last step that we can ask is, can we replicate or simplify this fund? And short answer is, of course, yes. We've already seen that from a benchmarking perspective, that this fund is very similar to a global 60/40, and global 60/40 is simply, the MSCI ARCV, US investment grade bonds, right, with a 60/40% allocation. And what we can see that since 2012, right, effectively this simple portfolio comprised of only two securities, right, would have actually had exhibited the same trends, right, but generated a higher return. and not only a higher CAGR, but also a higher Sharpe ratio, 0.55 versus 0.548. And this, while only costing 20 basis points versus MALOX charges 84 basis points. And so this kind of concludes our short analysis of BlackRock's global allocation fund. So as mentioned, this is a fund that was quite large at some point, and at some point also did create value for investors. But as time has passed, right, there's been more value destruction, and there's just nothing special about this fund, and it's certainly not worth paying 84 basis points for this, right? Because you can replicate this, get a higher return, get a high Sharpe ratio, right, for 20 basis points. Hope that helps. Have a nice day.